Good afternoon. This is Ken Long with Tortoise Capital with a review of the weekend trading report for March 12th, 2016. Market remains in sideways normal conditions. On an annual basis using weekly RSI 14, we are in the middle of neutral at 55 out of 100. On a shorter term basis with the 10-day NDX, we are overbought at 99 out of 100. Looking at the market mosaic, price with respect to the 200-day moving average is at 1.02%. That's white sideways, so we are above average compared to the last 6 months, although remaining in sideways. Slope of the 50 is yellow neutral at minus 0.28. The ADX is a non-trending 14.6. ATR percentage has declined to 1.32%. The risk index is the 30-period moving average of the VIX divided by the 10. The threshold between risk on and risk off is 1.0. The current reading is at 1.197, so we are well into risk on. The Z-score is computed by taking that reading of 1.197, comparing it to the last 5,000 trading days, finding normal and the standard deviation, and the risk Z computes to 2.21. You can see a 90-day histogram of that indicator here. After 3 successive lower lows, we now have a higher low, and now we've moved out to greater than 2 standard deviations above the long-term average and strengthening. The last time this got up to plus 4 before it rolled over, so there's some possibilities for additional moves upward here. This is still favorable for the long side, with the only caveat being that we are in sideways normal conditions. You can see the blended monthly rebalancing current holdings and the current leaders based on Friday's closing prices, and the next re-evaluation is due 1 April, thereabouts. In ETF2, the theoretical exposure increases to 80%. The model portfolio will be at 80% exposed with the addition of 1 new position in metals and mining. So look at the blended monthly rebalancing portfolios real quick here. The commodity-based economy of Australia moves it to the top. Latin America up to the top, followed by treasuries and real estate and Asia less Japan. Russell small cap still remains on the bottom of the stack. It's negative this week, and the blended number is still negative. In ETF 32, you can see the defensive plays of gold and utilities still at the top, but Brazil has moved into 3rd position. Only a handful of symbols on a cash signal. In ETF Max, you can see that a lot of the leaders from last week had some negative pullback here on the 1 week. Platinum looks to be interesting, as is precious metals, still having a nice run. Brazil sugar and Brazil consumer all having nice weeks, so I'm looking for more momentum in Brazil and Latin America. And then metals and mining I want to investigate as a possible turbo. In the S&P 500, we've got to look at Urban Outfitters to see what that 17% is all about, along with Dollar General Store. That's 2 weeks in a row. And California Pipeline. So actually CPGX. So I'm looking for follow-through momentum or sharp reversals after things have had enormous gains. Win remains always on our short list here. Another good week after a remarkable 1 month set of gains. So looking for follow-through momentum there. This is the market health check. The vertical blue lines are 10, 20, and 30 days worth of look back. Here's the 60. Horizontal red lines are support levels that used to be resistance, and these would be price targets on the way down if price were to collapse here. The purple lines are price targets on the upside. We achieved our long-term target, or actually our intermediate target of 203. Next target is really the swing high at 211. We've moved from minus Z2 all the way up to plus Z2. That's a 4 sigma move from the far side of the floodplain to the far side of the floodplain. We're now just peaking above the 200-day moving average. You can see the river has sloped up. The dragon, which is the 10-period Bollinger Band plus or minus a half, has moved from one side of the river all the way to the other side of the river. I want you to notice right here that the dragon had come out of the river slightly, can't stay in that position long, and now has moved back to the far side. 10-period regression line and channel is tight and steeply up. 30-period channel is steeply up. You can see that that reading is at a favorable slope of almost 0.5. It's above the threshold of 0.4, which makes this a statistically significant strong move. So that is a remarkably strong move over the last 30 days. We've come almost 11% off the swing low, with only about 4% more to go to the swing high. So we're definitely in, I'm in profit preservation mode here and measured gains towards the swing high. If it gets above 211, then I'm interested again in the long-term bear, but right now I'm still treating this as channeling trading and measured reward and risk calculations, and I respect that we're very close to the 200-day moving average still, and so I'm cautiously optimistic. Inside the ETF2 regional report, you can see we've improved to 8 out of 10 of the indexes are now on buy signals, only 2 on cash, so we improved from 50-50 to 80-20. The S&P at 47 is still stronger than the globals at 44, so the U.S. is favored. Inside the U.S., it's large caps and mid caps, then tech, and then small caps. 2 strongest sectors, Latin America and Asia less Japan. Been a long time since we've been able to say that. And then the 2 weakest sectors, Europe and the U.S. small caps. Inside the S&P sector spiders, utilities remain strong, as are consumer staples and technology. Weakness in healthcare and discretionary. World market model. All the value plays in the U.S. are above average, and as is the S&P 500, everything else is below average of the database. Japan below average, Asia less Japan above average. A mixed bag here in Asia. See strength, exceptional strength in Australia, Malaysia, Thailand, Indonesia. Weakness in Vietnam, Hong Kong, China. Latin America exceptionally strong. Emerging markets, Canada, Mexico above average. Brazil exceptionally strong as well. Everything Europe below average. Only gold is exceptionally strong. These other asset classes still above average strength in real estate, silver, treasuries, and corporate bonds. ETF top 30 using the ETF2 lens. Real strength in the miners, Indonesia. Metals and mining, XME. This is one we just are adding a position to here. Brazil going from red on consistency to green on strength is an indicator just how sharp that turnaround has been. South Africa also green and red, so we're going to go investigate that one too. See what that's looking like. In the Dow, Chevron has moved up into the top of the stack here with the green and white. Caterpillar green and yellow, so that's going to be, following the basic materials, and so that's very interesting. 5 symbols at the bottom of the stack here that are in the red. Extreme weakness in Disney, Apple, Boeing, Goldman Sachs, American Express. The red and then green shows you how quickly Goldman Sachs fell out of favor. So there may be an overreaction on that one. I'll go investigate. Apple we should look at because it's a must-own and is so deeply discounted that maybe there's a buy-on-sale opportunity here. It's hard to imagine that people would have a buying interest in the market but would not be taking advantage of buying Apple at depressed prices. Disney sort of in the same category there, so we'll look at Disney also. In the daily report, we've got overreaction short side signals for Australia, emerging markets in Europe. Because of the strength that we've seen in this rebound and the decline of volatility, I'm not going to take these automatically because we're so close to the 200-day moving average. So I'm going to wait to see which way the market votes each day and then take these signals accordingly, starting with intraday positions and then holding them overnight if and only if they make money for me directionally during the day. So we've got channeling and treasuries, a bundle of overreaction signals, and then 4 decent ones on the auto framer and a 5D down in Procter & Gamble. So we'll take a look at that. In the Dow 30 Tactical, a bundle of dojis from Friday, a couple of overreaction short signals. Here's the 5-day down at Procter & Gamble. Goldman Sachs test out at 2.5 to 1 on the auto framer. Caterpillar at 2.8 to 1. We've already got those on the stack. A good number of frog candidates, and then an RSI2 value of 4 in Procter & Gamble, which makes that very interesting. Inside the ETF 30. Those are the overreaction signals. We have a 4.0 to 1 ratio in VIX. You can see just how much volatility has come out of the market here in the red, and pullbacks in treasuries, and some strength down here, Brazil, Latin America, and then the inverse volatility. Auto framer candidates and their key price levels. And then in the regression line fractal framework, these are in the top shelf. These in the green are the ones that are the most numbers of ATR below their own RL270. That gives us deep discounted value opportunities. I like Disney, and we'll take a look at Nike. The bottom shelf in the red are the ones that are the most ATRs above their own RL270, so these are the relative strength leaders. I'll be looking at Walmart and Verizon for continuity and continuation trades. There's Brazil, metals and mining. And then some daily squeezes. These are ones that are postured for large one-day moves on the basis that on Friday they were squeezed tightly or narrowly based on their average ranges of the last 30 days, and yet their range stat suggests that if they do break out above Friday's high, that there's room for a one-day big move. And so I'm very interested, again, when I see Disney. We'll take a look at Amazon, the diamonds, Google. And those are the ones that really come to mind for me. I like low as well. So that gives me plenty of things to look at here for this, and then we'll be looking at the swing trade candidates for the usual suspects for the online workshop, which is going pretty well. We're coming up to the last couple weeks of that one. We've recorded all of the lectures and lessons and the ongoing case studies, and we'll be creating a self-paced home study course for advanced swing trading. So go ahead and contact me if you're interested in that. But very favorable reactions from the guys going through the workshop now. Pretty pleased with that product. We made some important breakthroughs and insights. In the more on the market mosaic here, you can see that the polynomial regression line has come back to the 30, and so this looks like something like fair value. We've had a nice rebound off the bottom using the slope stat, coming up to a 2 sigma gain here. The last time it did this and it rolled over its own 10 period, we got that period of sideways chop, and that's my concern right now after this really nice move off the bottom and hovering around the 200-day moving average, that maybe that is the size of the leg from 180 to 200. I mean, it's still a pretty good move. And you can see, yeah, we've pulled just up north of the 200-day moving average here on the stretch. And now we've gone from what had been the second steepest downward 30-day in the last 10 years. Only one 30-day period got steeper. We're now the third steepest up move. So that tells you the size of that roller coaster of the last 3 months. That has been very challenging for conventional models. It's been very manageable for us using the combination of intraday and swing trading. But just the reason I like this slope stat is the nice and orderly signals that it gives you when you simply lag it by its 10 period moving average. You get these crossovers in plenty of time to give you alerts that the state of nature is changing. See how much of the volatility has drained out of the market. We're now below the 6 month or the average of the last 100 days. Just going to flash through a couple stats for you real quick. Looking at the slopes, the z-scores of the slopes of our various timed regression lines, the 90, the 30, and the 10. See, the 10 has rolled over a little bit here. The 30 has moved from -3 to +2. The 90 has definitely rolled over and suggests a change in the longer-term trend. The last time it did that, down in here, we had that nice move. We had this nice early move right away. So we'll be watching this. I think, the next test is up here at 210. Can this dragon continue to go and get up to 210? So that's what a 7 sigma move, like 4 down, 3 up, or 3 down and then 4 up. Good. That's everything I want to cover for tonight, and I'll be framing these trades up here for the online swing workshop, guys. So, this is Ken Long from Tortoise Capital. Keep your risk measured and your powder dry. We'll see you in the chat room.